Right now, fear is running high in the markets. We have Bitcoin taking a dip below that key 0.5 Fibonacci retracement at 80,000 and gold running up towards all-time highs as some investors are seeking safety. And then there's some altcoins on a completely different phase of their market cycle. All of this volatility is being driven by trade war fears, recession concerns, and uncertainty around that national crypto reserve. So the big question is, what happens next? Are we looking at another shakeout where the market is preparing for new highs, or is the market setting up for something bigger? Hello everybody, and welcome back to the DataDash channel. My name is Cassie, and some of you may know me as Cassie Trades over on X, where I share what I've learned over the last 10 years analyzing and trading the crypto markets. So if you're not doing so already, make sure to give me a follow over there. And today we're going to break it all down using technical analysis. No speculation, no noise, just data and market structure. We'll take a look at Bitcoin, S&P 500, and then we'll get into XRP. So if you like videos like this where we break down the crypto market, make sure to give this video a like and subscribe to DataDash. So we have a lot to cover today. Let's get right into it. All right, you guys, so I have the Bitcoin 4-hour Coinbase chart pulled up here. And you can see with this Fibonacci level, we have Bitcoin coming right up and hitting resistance at its all-time high here with an Elliott wave fifth wave. And normally with Elliott wave fifth wave, this is the exhausted wave and the wave that signals a larger correction. So I do think that we could be starting that from our all-time high there. And since then, you can see the correction that has happened in the market. So we have now reached this key 0.5 Fibonacci retracement, and this recently was our second dip below that level. So this is a very critical Fibonacci level. I've talked about this level in other videos. This level, anything above the 0.5, is maintaining that bullish momentum on Bitcoin, but breaking down below 80,000 and holding down there is going to bring in a lot of bearish momentum on Bitcoin. And we just took a dip below that level again recently in the last few days and have since broken back up above that. So we are still holding above that 0.5 retracement at this time. And you can even see one thing that I wanted to note with this last dip down below the 0.5, our RSI is showing that the selling was exhausted. So you can see that even though the price made a new low, we are getting exhausted on the RSI, and we are starting to form a bullish divergence on the RSI with that last touch there. So that is exciting and hopeful for Bitcoin that this could be our pivot point in the market as we do move on to new highs. So that is looking like it is so far support. And like I said, this key 0.5 Fibonacci area here at 80,000 is very key for Bitcoin to hold for all of our bullish momentum so far that we've seen over the last several months. So this is going to, again, continue to act as major support. What we're looking for as far as resistance ahead, we do have that 86,000 as key resistance, as well as 95,000. Both of those are key resistances on Bitcoin at this time. What we would need for confirmation of a break to new trend is price coming up and breaking those prices and flipping those from resistance to support. So really building that price action above that and getting closes on candles above those prices would really help to confirm. And then more confirmation that we won't break down is making sure that Bitcoin holds above this key area here at that 80,000. The next support level, if we do break down below this 0.5, would be at the 618 Fibonacci retracement at 72,000. So that's down here. That is the golden retracement level there. So if we do get a breakdown here below 0.5, that is where I think Bitcoin will find support next. And if it does, ideally it continues to hold our bullish trend that it's formed on this 4-hour RSI. But so far it is looking like we've had a strong reaction off this 0.5. We are just waiting now for some momentum and volume to come in and really start to test those higher resistances there. So that's what we're looking at on Bitcoin. So let's take a look over at the S&P chart, because I do think it mirrors a lot to Bitcoin, with Bitcoin being more of the exaggerated version of the S&P, but you can really start to get a mirror of these two markets together. So let's take a look at that quickly. All right, you guys, so I have the S&P 500 chart pulled up here, and we're step back on the daily time frame, just so you can get an idea of this massive trend that has been forming for a very long time on the S&P 500. But similar to Bitcoin, it did come to a Fibonacci target, an Elliott wave target, as its high. So you can see here, right at this 618 extension, it hit essentially a top in the market and has since corrected. So it hit that with precision. And you can even see here on the RSI, as the price was continuing to come up, it is just massively losing strength as it approached that target. And then since then, we had just a clean break right to that 118 Fibonacci retracement. And you can see the S&P 500 is coming right to this 118 Fibonacci retracement. And this is a bullish retracement level found before the first 236 Fibonacci retracement. So it's not a default Fibonacci level. It is something that you'll want to add to your Fibonacci sets if you're looking to find a level before the 236 level. Look to add your 118. But you can see the S&P is starting to come down to that first Fibonacci support. So it is looking like we could get some support very soon in this market, which could align to Bitcoin holding that 0.5 Fibonacci support at 80,000 with this last low. So we're kind of getting alignment there with S&P finding its support here at the 118 and Bitcoin finding support at the 0.5. We're getting alignment there where we could see at least a short-term recovery in both of those markets. But on the macro trend, both of those are aligning for a macro larger correction. So it is possible, although we are seeing short-term signs of a bounce from these levels, it is possible that we don't continue on to new highs, that it's just a relief bounce before that macro correction continues on. So it's a very critical level and very critical time across all markets to be watching at this time. So this was the S&P 500, very similar to Bitcoin. Bitcoin is obviously way more exaggerated. It's way past a 118 Fibonacci retracement. But you can see kind of how they're aligning similar this way. So let's go take a look at XRP, because I do think there are many altcoins not on the same cycle as Bitcoin or the S&P 500, meaning they have not come to that exhausted high. They have not reached that wave 5 that Bitcoin and the S&P 500 have. So let's take a look at XRP and see where that could be heading. All right, everybody, I have XRP pulled up here, which is an altcoin that I think is on a completely different phase of the market cycle than Bitcoin. And I've talked about this in pretty much every one of my videos. But what you can see here is XRP coming again down to test that critical 0.5 support, just like Bitcoin. So similar to Bitcoin, anything above that 0.5 Fibonacci retracement is going to remain bullish momentum, and then below that 0.5 is obviously bearish. So you can see here we have XRP coming down very precisely, testing that 0.5 again, wicking down almost to the penny. So it did not make a new low, so we do not change our macro targets from here. But what you can see is we could be on a new trend from that 0.5 touch again. So we have upwards resistance right around 225 is going to be key resistance to break in order to invalidate any new lows. But then above that, we have 270 as key resistance. But this could be on a macro new trend where we really start to see new highs coming in and quick. So we have previous all-time high, obviously as massive resistance near 380, but breaking previous all-time highs really sets up the tone for that massive wave trend up towards that $8 to $13 that everyone is talking about. And so we have Bitcoin aligning, S&P 500 aligning with that 118 touch, and then here with XRP getting that last low in. And then similar to Bitcoin, this last low here on XRP did also create a bullish divergence on the RSI, which is just a hidden signal that we could see a pivot in the market. So basically, as the price came down again to touch that 0.5 level, our strength on the selling was not as high. So our selling was exhausted and momentum is actually picking up quite strong on XRP. It's holding quite nicely. So this is why I don't think XRP has really the same bearish outlook as the S&P 500 or Bitcoin, because we have not come up to that exhausted high quite yet. So at this point, we have some really interesting dynamics playing out. We have the S&P 500 finally showing some cracks. We have Bitcoin and XRP showing bullish divergence with this last test of critical support. And this is why it's so important to stay focused on the technicals and the charts. With everyone else talking about trade war fears and recession concerns, all that really matters is price action, and you can remove all of the noise and emotion by sticking to technical analysis. So guys, thank you so much for joining. And again, if you like videos just like this one, then make sure to give this a like and subscribe over to DataDash. So we'll see you guys in the next one. Thank you.